Now, in this second session of FNO, we will learn what is in the money, out of the money, and at the money. For that, first we need to understand what is strike price. Let us take example of Bank Nifty. Let's say Bank Nifty is trading at 40,000. Okay, Bank Nifty is trading at 40,000. Now, Bank Nifty is here. Bank Nifty is trading as 40,000. When you want to buy an option, when you want to buy one lot of Bank Nifty in options, you will see that there are available options at different prices, like Bank Nifty March 39,000 CE, Bank Nifty March 39,000 PE. So what is that 39,000? What is that? Correct. So that is called strike price. If it is like this, Bank Nifty March 39,000 CE/PE. Either one of them will be written. Now I am explaining, that's why I wrote bro. This is called the strike price. This is called the strike price. So if Bank Nifty is at 40,000, okay, if Bank Nifty is at 40,000, then there will be strike prices at 39,500, 39, 38,500, 40,500, 41,000, 41,500. When you will be trying to buy an option lot, you can buy a lot in either of those strike prices. These are strike prices, right? I think I am able to make you understand what are the strike prices. So the strike prices are the price levels that are either at the current level where Bank Nifty is trading, or at a level higher than the current level where Bank Nifty is trading, or a level lower than where Bank Nifty is trading. Those are called different strike prices. The strike price, now remember, this is very easy, put it in your mind and remember this. The strike price, which is at a very similar position to the current trading price of Bank Nifty, is called ATM, at the money. Like say Bank Nifty is trading as 40,100. Okay, let's say Bank Nifty is trading as 40,100 and we bought 40,000. We will call that at the money price, at the money option premium. Okay, if Bank Nifty is trading as 40,050, we bought 40,000, we'll call it at the money because it is very close to the price where Bank Nifty is currently trading. Now, if we buy 39,000, we will call that in the money. If we buy at 39,000, we will call that in the money. Let's say Bank Nifty is trading at 40,100. We are buying 39,000 rupees premium. We are buying 39,000 strike price premium. These examples we are taking CE. What is CE and PE? I will explain to you later on, just within a minute. You just understand we are talking about CE. CE means when we are buying CE, we are betting market will go up. Call option. CE stands for call option. When we are buying CE, we are betting market will go up. So when Bank Nifty is trading at around 40,000 and we are buying 39,000, call option, right? We are betting that market will go up, and 39,000 is much below the price where Bank Nifty is currently trading. That's why it is called in the money. Correct? Let's say now out of the money. Bank Nifty is currently trading at 40,000 levels, but we bought an option at 41,000 level, option premium at 41,000 level. So where is 41,000? 41,000 is much higher where Bank Nifty is currently trading. That's why it is called out of the money, right? That's why it is called out of the money. Now I hope I am able to make it clear to you what is in the money, what is at the money, what is out of the money. Now we'll understand the differences between in the money, out of the money, and at the money. There are a lot of technical terms like theta, decay, etc., gamma value, etc. All right, but like I said, no trader does mathematical calculation on those. They just know what happens, what's the difference in those. That's what comes to practical use. And I'm repeating once again, this is a practical course, so we will only learn practical things. We won't be learning anything extra that won't be of any use to us in the real life, correct? So what happens in the money? In the money, the intrinsic value is maximum. What do we mean by intrinsic value? Intrinsic value means, intrinsic value represents the real value of bank nifty. Okay, an option premium is made up of a lot of parts, like the real value of bank nifty, time value. Okay, because options, in the first class I told, right, options expire. Bank nifty options expire weekly, every week. So the time value is always negative, because on Friday the time value is maximum. Then in the coming Thursday, theoretically that option will go to 0. So the time value is always negative, because it is always decreasing, so that it can take the option premium to 0. So our option is made up of a lot of parts, an option premium. So in the money, the intrinsic value is maximum, the real value of bank nifty. What is intrinsic value? By intrinsic value we mean the real value of bank nifty is maximum. So the other values like time value, which are always negative, those are less in the money, correct? So what happens in the money is that less volatile. Let's say bank nifty going up, down, up, down, up, down, up, down. What happens is that if in out of the money you are losing 100 rupees, in the money you will be losing 80 rupees, because time value here is less. In out of the money, time value is maximum, and in all cases time value is always negative, right? Time value is always negative. So in the money, the negative factor is much less than out of the money, where the negative factor is maximum. So in volatility, in intrinsic value, you will lose less, correct? So you must be thinking, why should anyone trade other than in the money? Because in the money is great, it saves me from volatility, it saves me from time duration. Because see, the longer your trade takes to achieve the target, the longer will you face the time value deduction, right? यार यहाँ पे तो in the money the time value deduction is very less, so it's win-win. Now the catch is in the money is more expensive than out of the money and at the money. That's the catch. In the money is more expensive than at the money and out of the money. Let's say an in the money bank nifty lot costs 10,000 rupees, or let's say 8,000 rupees. Okay, 8,000 rupees. Your total fund is 10,000 rupees. Trader A buys in the money. He can only buy one lot. Trader B buys out of the money, and out of the money cost 5,000. Out of the money, let's say one lot of out of the money bank nifty option costs 5,000 on that at that particular time. So he can buy 2 lots, correct? Now if the trade goes in their direction, trader B will make lot of more money, right? Lots of more money, because he has 50 units and this guy has only 25 units. No matter the time decay, hoga na, there will be time decay, but the units are absolutely double. He will make a lot of more money than trader A. That's why you have to understand when you have to use out of the money, when you have to use in the money. Out of the money, intrinsic value, minimum, time decay, maximum, correct? Understood why it is the difference between in the money and out of the money in practical life? And at the money, it's medium. Now when shall we choose in the money, out of the money and at the money? Friday, okay, Friday where the option is just created, right? The previous option expired on Thursday, and on Friday the new option for the next new week is created. So when it is fresh, the time decay hasn't yet even started, right? There is a lot of value, there's a lot of time for the entire time value in that premium to go to zero, correct? It has time till Friday, Monday, Tuesday, Wednesday, Thursday. It has a lot of time for the time value to go to zero. So on Friday we can trade out of the money. On Friday we can definitely trade out of the money. We can even trade out of the money on Monday. We can even trade out of the money on Monday. On Tuesday we'll prefer at the money. On Tuesday we'll prefer at the money. On Wednesday, depending to the market condition, I cannot explain you that. You will get to understand on your own. This is self-realization. This is self-instinct. On Wednesday we'll trade at the money or in the money. And on Thursday we'll definitely trade in the money, because the time decay is maximum, because Thursday theoretically the option has to go to zero, correct? So on Thursday we'll trade in the money. I hope this is clear. Difference between in the money, at the money and out of the money. Alright, now what is this? March. This is the month name. Usually in March you will find 4 option names. For 4 different Thursdays, right? For 4 different Thursdays you will find 4 option names. Let's assume 1st March is on Thursday, then 8th March, right? Like that. So what happens on the last week? Let's say Thursday it is 31st Jan. Thursday is 31st Jan, and then from Friday Feb begins. So the last week will not be represented by a date. The last week will only be represented by the name of the month. That's it. But the previous weeks will be represented by the particular day on which Thursday is. It can be 15th, 16th, whatever the day is, it will be written like this: 16th March. That's me. So in the name of option we have covered this date per strike price. Now comes CE or PE. CE stands for call option, PE stands for put option, right? When you are an option buyer, for you, if you buy CE, it means you are betting market will go up. As an option buyer, when you are buying PE, you are betting that market will go down. Okay, but on the other hand, as an option seller means you are creating the option. You are writing option seller or option writer. It means what? You are, let's say, trader B is writing or selling the option. He is writing that option premium. Then only I can buy, right? Where I will buy, it will not be created out of thin air, correct? Someone has to create it, someone has to write the option. So writing the option is called option selling. For an option seller, CE means he is betting that the market will go down. For an option seller or writer, CE means he is betting that the market will go down, and PE means market will go up. Option seller and option buyer, that's the difference between CE and PE. So when you will be buying an option, you know exactly what are the different parts are. Call option, put option done, this is done, strike price, date is done, and Bank Nifty is the name of the asset. It can be Reliance, it can be other Tata Motors, whatever the name of the asset is, it will be name of the asset. Thank you.